President Ramaphosa has urged calm amid the tariff storm and has insisted that targeted relief will blunt the impact of the 30% US tariff on South African exports. That move will come into effect in 7 days' time and is expected to cost tens of thousands of jobs. SA is not alone in its pain. US President Donald Trump has slapped new tariff rates ranging from 10 to 40% on dozens of countries as he seeks to reshape global trade on more favorable terms for America. Pretoria has tried for months to negotiate a deal with Washington, but efforts were unsuccessful. Trade Minister Park Stau says higher tariffs are a threat to SA's export capacity, particularly in key sectors such as automotive, agro-processing, steel and chemicals. To help ease the impact, the Department of Trade, Industry and Competition has initiated emergency measures. This includes the launch of an export support desk. The desk will serve as a one-stop contact point for exporters, which will provide them with real-time updates, guidance on compliance, and support in pivoting to alternative markets across Africa, Asia, the EU, and Latin America. The department is also in discussions with Treasury about possible tax incentives. The Rand has reacted negatively to the news about the tariffs. The local unit has breached the 18 Rand to the dollar mark. That's as the dollar is headed for its best week in almost 3 years against its major peers. Sentiment in the manufacturing sector has turned positive. The Absa Purchasing Managers Index rose 2.3 points to a reading of 50.8 in July. This follows 8 consecutive months in contraction territory. The improvement was driven by a sharp rebound in demand conditions, but Absa has noted that weak employment and persistent structural constraints suggest a full recovery in the sector remains fragile. SA's trade balance, meanwhile, has widened. The country recorded a preliminary surplus of 22 billion rand in June. That's 10% higher than the previous month. Imports, including petroleum oil, smartphones and crude oil, declined by 3.5%, falling more sharply than exports during the period. Exports were down nearly 2%, driven by lower sales of gold, coal and vehicles. Government has assured the Financial Action Task Force of its commitment to continue improving SA's legislative regime to combat money laundering and the financing of terrorism. The commitment is one of the criteria used by the Global Intergovernmental Organization in assessing whether a country be removed from its grey list. SA has been on the FATF's grey list since 2023, and the country's status will be reviewed in October. It's expected that SA will be removed as it substantially completed all 22 recommendations contained in a plan of action adopted when SA was grey listed.